Welcome back, everyone. Hope you had a nice lunch and thanks for joining Track A. You're now part of our main conference, Track A, and under this track, we'll be addressing a couple of interesting themes around perfecting cross-border payments and decentralized finance. Without further delay, let's all welcome the first speaker for today's afternoon. We have Charles Housey, the APAC Managing Director from Consensus, our events partner, who are here with us today to share some interesting insights on why institutions can't ignore decentralized finance. So let's all welcome Charles.
Thanks a lot, Suana, for having me today.
Hi,
my
Charles.
name is Charles Dossy. I'm sharing my screen just to get a quick confirmation. Can you see my slide, yeah?
Not yet, Charles.
Just 1 minute. Here you go, you should be seeing it right now.
All good. Over to you, Charles. Thank you.
Excellent. Thank you so much. So in the next few minutes, I will be sharing with you what is decentralized finance. You might be familiar, or you might have heard about the concept and what has changed in 2021 and why institutions can't ignore the phenomenon anymore. So my name is Charles Dossy. I'm the Managing Director for Consensus here in Asia Pacific. We have offices in Hong Kong, Singapore, Australia, and Japan. And I will share a few words about the company later on. A safe harbor before we go through this topic. This is not an investment or any kind of advice in any shape or form. It's just purely market information for your consideration. So let's talk about CBDCs, stablecoin. Let's look at the numbers of about DeFi. Let's look at the comparisons of DeFi and traditional finance, as well as looking at some real examples. And I will finish this conversation with some predictions for 2022. Before we start, a few words about Consensus. We are the world's largest blockchain engineering company. We have three main audiences: developers, enterprise, and end users. And what we essentially do is we abstract the complexity of smart contract and blockchain technology to make them consumable by the world of enterprise and entrepreneurs. We've been working over the past 6 years with numerous government and financial institutions. I guess the logos are talking for themselves here. So a lot of support for the renovation of finance in general, and that's why it's relevant here to speak about decentralized finance. We are the company behind the #1 software development environment for Ethereum smart contracts, Truffle, but we also help all the developers to connect to the mainnet via our services from Infura, as well as managing their security with the group at Consensus called Consensus Diligence. And you might be familiar with one of our most popular products, MetaMask, which celebrated its 10 million user a few weeks ago. So money is changing. Money is changing again. Let's have a look at the stablecoin versus CBDCs, and what we see on the right of my screen is the traditional payment companies which have been bringing to us digital money, and on the left of my screen we see some key numbers about stablecoin. So stablecoin are essentially token which represent 1-to-1 US dollar or some other currencies. And you can use this representation of money on multiple services on the blockchain networks. So today, this ecosystem of tokenized US dollar represent about 87 billion US dollar of tokens in circulation in this ecosystem. So it's a number we cannot ignore anymore. And besides this stable coins, so we have this phenomenon which you all have heard about, central bank digital currencies, which are a hot topic from Europe to US to China and here all over Asia. And that's interesting to see that the central banks are recognizing this blockchain economy rising very fast and wants to stay relevant in this new generation of internet being built before our eyes. So when you build central bank digital currencies, you've got usually two topics. One of them is the wholesale central bank digital currencies, which are more looking at connecting as the central banks with commercial banks and starting to exchange money between central banks and commercial banks via central bank digital currencies. So that's the wholesale CBDCs. The use cases are usually cross-border payment, configurable money systems, as well as atomic transactions. On the other side of the spectrum of experience and use cases are the retail CBDCs, which this time are really focusing on, I would say, upgrading the software around money down to our very own wallets, us as final users. At Consensus, we had the chance to work on multiple topics around CBDCs since 2018, from wholesale CBDCs with the MAS in Singapore and many other central banks. We are involved in the MCBDC Bridge project here in Hong Kong, together with Bank of Thailand, central banks of the UAE, BIS, and Bank of China. And we've been also working with the Retail Bank of Thailand on retail CBDCs. So you see here a few screens of our applications, which is made available to builders and to companies in the world of payments. Decentralized finance in 2021 is a very active ecosystem with more than 2 trillion US dollar of market cap. So that's here again a market we can certainly not ignore. The overall cryptocurrency market cap to 2 trillion US dollars, utility token about 600 billion US dollars. Company digital shares are still yet to come into this ecosystem. Digital bonds have been growing very fast, and why this decentralized finance is getting so much big numbers? It's all around three main applications or group of applications, which we can kind of categorize with the automated issuance and servicing of workflows via smart contract. So think of atomic issuance versus payment, automated dividend calculation, for example. There is also a very large a group of applications and activity around decentralized exchanges, about 14 billion US dollar of daily trade on such platforms and protocol. So think of decentralized price formations algorithm, decentralized platform to match the buyers and sellers of any kind of asset, atomic post-trade settlement. So you can think of some protocols such as Codify Markets, 0x protocol, or Uniswap are the biggest representative of such phenomena. And the last category of features in decentralized finance is decentralized lending, with about today 20 plus billion US dollar of outstanding. So you can define an interest rate, you can match the lender and the borrowers, and also fully automate the process of risk management and transactions around lending transactions. Number of DeFi users is clearly on the rise. I think this kind of hockey stick is really illustrating very well the pace of the decentralized finance ecosystem. Today, we estimate to 3 million users of DeFi, with about $90 billion of assets in decentralized finance protocol. So you see here some illustrations of the different protocols. So a lot of competition between these protocols, but already some winners are kind of standing out. Companies such as Uniswap, for example, or Synthetics and Curve as well. And what is very interesting to capture is that these protocols and these DeFi applications are actually generating positive revenues. So they create revenues for themselves. It's the best proof of product market fit. They are profitable ecosystems standing on their own. And what it means, it's self-sustaining. They can finance their growth and their research, and they will be also long-lasting. So it's not only a fashion or some kind of hype, but all these companies are building very well and good foundations for their business and and good profit and loss systems. So we see here on the lending protocol side of things, three main protocols to look at: Aave, Curve Finance, and Maker, with also large number, as we were mentioning earlier, I will say, within the lending ecosystem. And this ecosystem is not a new ecosystem. It started back in 2018, and we see here a snapshot of the activity and the number of players within 2 years. And I guess if we had an update at the end of this year of 2021, we will need an extra slide to cover the number of companies and investors in this space. And decentralized finance essentially today give you some equivalent, obviously not of the same size yet, but as we discussed earlier, of very significant size already. You find some equivalents of centralized finance categories of activities in the decentralized finance world. So if you look at central banking, commercial banking, exchange, brokerage, insurance, and payment, all around this Ethereum very vivid ecosystem of more than 400,000 developers globally, find applications which will cover this kind of activities. The DeFi stack is working in a fairly straightforward and composable manner. So you see here at the bottom of the slide, the settlement layer. We've got on the top of it an exchange layer, and then some financial primitives such as stablecoin, borrowing, lending, derivative, or securities. So all of these create a very well structured tech stack, I will say, but as well as some composability, and that's what it is really exciting and creating all these innovations we are seeing today. So in the world of payments, we find some equivalent in the old tech stack with the new tech stack. So for example, WorldPay gets some competition today from MetaMask. Jack Henry in the world of core banking get competition from Maker. Lending and underwriting, a market well served by Finastra, is also getting some competition from Compound. So the scale of this project is not exactly the same yet, but we see them long lasting and generating profit, and clearly signaling a very strong product market fit. So that's really what stands out here. And the reason this DeFi is incredibly interesting is all the economic abstractions you can do using the blockchain technology to predefine a set of formal rules to make sure that you've got a self-sustainable stability of the operations, ways for you to do composable transactions between the different stacks and between the different layers, as well as atomic execution. Atomic execution means you will essentially trigger a transaction, and as soon as all the parameters of your transactions are met, software will essentially either deliver the goods or deliver the asset to you and get the payment to the seller. So it's really some kind of new autonomous and highly efficient and transparent infrastructure, which really excite all the people from finance in general. What is interesting to note as well is the rise of smart contracts. So in this DeFi space, you've got obviously traders, which will be buyer and sellers, and trading over some smart contract. But we start to see also new generation of players on the market, which are smart contracts themselves, which can represent either a company or they can represent a group of investors. But it's very interesting to see the growth of these protocols in terms of wealth capture and management. And the way we can link the traditional finance with DeFi, decentralized finance, is looking at all this signal we get from the market of companies regulated by classic regulators starting to get license to connect DeFi with payment. For example, in the UK with Aave, Singapore is obviously extremely active. The Singapore bank DBS is one of the examples, but also looking at how the Swiss exchange or some others are looking at building on Ethereum. What is very interesting lately, we started to see some regulated entities which have been issuing bonds on the blockchain, looking at essentially leveraging decentralized finance to bring into decentralized finance real world assets. So you see here public information where you see the Forge group, part of Société Générale, essentially sending a query to a decentralized protocol in order to explore the possibility of transacting and bringing into this decentralized finance protocol some real world assets which have been already tokenized on blockchain. We see also some other sign. Earlier this week, Consensus has been launching MetaMask institutionals, targeting the crypto hedge funds and crypto traders to really help them to get much more compliant and solid infrastructure around their DeFi interactions. And it comes first with some first custody partners such as Credo, BitGo, and Cactus Custody to really help these hedge funds and crypto traders to get the safest and the most compliant ways to trade in the decentralized finance market. Getting closer to the end, I just want to illustrate for you what this decentralized finance bring to the table, and why it's very inspiring and exciting for many. If you look at the history of the New York Stock Exchange, over 200 plus years of existence, about 2,800 trading pairs have been created at the New York Stock Exchange. And if you look at some new protocol, decentralized exchanges time, living in the DeFi ecosystem, such as Uniswap, they've been able to create 36,000 trading pairs in less than 1 year. So it really shows you the pace and the value proposition and the demand for the market for such new infrastructure. If you want to stay updated on everything DeFi related, I warmly invite you to join the free newsletter from Consensus. We publish every quarter a DeFi report, which gives you the best data point about stablecoins, about flash loans, about centralized finance and decentralized finance interactions. So join this newsletter. It's really give you some good insight and help you to catch up. Some last point, this decentralized finance industry is hiring massively. It's also, I will say, one data point to really invite everyone to look closely at this space, because many of your peers, should they be in the US, in the hedge fund industry, or some others, are actively building large teams around decentralized finance. And as a company, the way you can start to be prepared for the decentralized finance opportunity is to look at the technology, at people, and at business in your organization, looking at decentralized digital asset custody. Should it be built in-house or outsourced? Looking at a token factory, looking at internal blockchains environment on Ethereum, for example, before getting access to the mainnet. Look at how you can train your people, how you can define roles around this new decentralized finance. And in terms of business, be involved in all the different opportunities and projects surfaced by your regulators or anything like this, because there is a lot of opportunities to learn with your regulators, with some partners about the technology, and essentially accelerate your learning curve. Two predictions to close this presentation. Most probably, in my humble opinion, within Q1 2022, we will see the CBDC transaction volume surpass stablecoin volumes. Probably in China, with the official launch kind of being signaled for early next year. That will be a very strong signal to see how private stablecoins actually will get competition ultimately from CBDCs. And the second one, within the year of 2022, I believe we will start to see the first regulated bank running exclusively on blockchain backend. So that will be very interesting to see how you can be a regulated bank, but without using the legacy systems such as fiat in its old format, or SWIFT as a global network, but relying exclusively on CBDC, stablecoins, and global financial infrastructure built on blockchain. So very strong growth of the CBDCs next year, as well as the first regulated banks on blockchain. Thank you so much. I am Charles from Consensus. I'm happy to take questions if time allows, yes, and keep discussing this topic.
Great, thanks, Charles. I'm just trying to look at the chat window here. Seems like we don't have any questions so far. So as mentioned, attendees, if you have got any questions for Charles, you may continue to send them in using the Q&A window. If he's not able to answer later on, I'm sure he will get back to you with his response to your questions after the summit. Thanks, Charles, once again for a great presentation. It was definitely a great pleasure having you as part of our FinTech and PayTech Connect Summit. Have a good rest of the conference.
Thank you so much.
Thank you.